In his best-selling book How to Make Money in Stocks, a Winning System in Good Times and Bad, William O'Neill introduces the CANSLIM system. The book was first published in 1988 and had a couple of revisions since. Ever since the publication, the CANSLIM system has been widely adopted and remains popular until today. CANSLIM is a position trading system and uses fundamental analysis combined with technical analysis and is often classified as growth investing. Fundamental criteria are used to determine which stocks meet the requirements. Technical criteria, combined with general market direction analysis, determine when the stock should be bought. Stop losses will determine when the stock will be sold. And besides these often quantifiable rules, the system also has less quantifiable rules which determine whether a stock is suited for the system or not. All of this will be discussed in this video. My name is Christoph. Welcome to ChartMill. CANSLIM is an acronym and the individual letters stand for C, the current big or accelerating quarterly earnings and sales per share. A, the annual earnings increases, looking for big growth. N, newer companies, new products, new management, new highs of properly formed chart bases. S, supply and demand, big volume demand at key points. L, leader or laggard, which is your stock. I, the institutional sponsorship. And M, the market direction. In the next sections, we will go over each of these criteria and describe how you can translate these criteria into filters for the ChartMill stock screener. We created a predefined screener configuration for the CANSLIM system, but we will also provide some additional filter suggestions. For a deeper and full understanding of these criteria, we do advise to read the book. EPS growth, and in this case the most recent quarterly earnings compared to the same quarter last year, is a major factor in the CANSLIM system. In the book, the author suggests an increase of at least 18 to 20%, but immediately mentions that 25 to 30% would also be a very reasonable minimum. For our example screen, we require a minimum of 20% quarter-to-quarter EPS increase, but as always, feel free to adjust this to your own needs. Besides the minimum required growth, the author also says that ideally this growth is accelerating, so we'd like the current quarter-to-quarter growth to be higher than the growth in previous quarters. To check on this, you can always manually check the most recent quarter-to-quarter growth numbers on the Estimates tab on the profile pages for each stock. If you want an explicit filter for this, you can add a filter requesting the last quarter-to-quarter growth to be above the last year-to-year growth. To do so, you will have to create a custom filter. Select the Custom tab on the stock screening page. For the left-hand side of the equation, select EPS growth quarter to quarter. For the comparison, select bigger than. And for the right-hand side of the equation, select EPS growth 1 year. Click Add Filter. Now the custom filter is visible in the upper right corner next to the other default filters. The same should be true for sales growth. We will add a filter requiring a minimum of 25% quarter-to-quarter revenue growth. We should mention that O'Neill also advises to check other stocks in the same industry. You should see some momentum in the whole industry and should at least find one other company which is showing similar growth numbers. Besides the most recent quarter earnings and sales increase, we need to make sure the companies we want to investigate deeper are not just having a good most recent quarter. O'Neill advises to look at the last 3 yearly statements and look for a minimum increase of yearly earnings per share numbers between 25 and 50%. We added a filter which requires a minimum 3-year EPS growth of 25%. Besides this, we also need a company to be profitable. O'Neill advises to use the return on equity number here. The higher the number, the better, but we added a filter which requires the return on equity at least 10%. The conditions related to these criteria are often a bit harder to quantify. The company should be doing something new. What new means exactly is to be judged by the investor and depends on the current state of the world. At some point in time, all of these things were new. Railroads, airplanes, personal computers, internet, streaming, cloud computing, etc. The book shows many examples of new companies or just companies involved in new things in the last 150 years. These new products are adopted by the general public, and this is the origin of increasing revenues and profits and can continue for many years. The The criterion for new highs is one of the aspects where CANSLIM uses a form of technical analysis, and this is also where it sets itself apart from more classical fundamental analysis systems. Demanding that a stock makes new highs is basically saying you can have all these great growth companies, but if no one else is picking up on this, it does not make much sense to invest in it. We did not include a near new high filter in our example screen, but you can easily add this. You can either add a signal filter on the performance tab or use a custom expression to demand any maximum distance from the 52-week high. The main reason why we are not including the filter explicitly is that we will be adding a relative strength filter. Supply, we prefer the number of outstanding shares, and more specifically the float, to be lower because this implies the supply is lower. ChartMill allows filtering both on the float and outstanding share number. Demand, this is measured in terms of trading volume. When the stock breaks out to a new level, we generally want this accompanied by volume peaks. The volume increase step contains several volume filters you can implement for this purpose. Supply and demand is not part of the basic trading idea because these are already quite specific filters. It is better to apply these once you have an initial broad list of stocks that qualify. O'Neill prefers companies that have a low amount of debt to equity. After all, these are less likely to run into trouble when interest rates rise. Not only the absolute number, but also the evolution is important. A decreasing trend over the past 2 or 3 years is positive. For the screen, we set the debt to equity filter at maximum 2. This is on the high side, but it counts as an absolute maximum. Once the other filters are set, you can, depending on the number of candidates, set this filter more strictly. In his book, O'Neill introduces the concept of relative strength. A relative strength is a number that indicates the percentage of all other stocks this stock outperforms. CANSLIM stocks are always high relative strength stocks. These stocks are what we call market leaders, as they outperform many of the other stocks on the market. By definition, a stock with a relative strength of 80 outperforms 80% of all other stocks. Again, this is a purely technical component of the system, and it serves the same use as the new high condition. Fundamental criteria alone are not sufficient. The stock should also be recognized and picked up by others. For our example screen, we require a minimum relative strength of 75, which means we only consider the 25% best stocks of the market. Please note that the relative strength mentioned in this video has nothing to do with the RSI indicator. Relative strength says something about the value of a stock compared to another stock, index or benchmark, while the RSI indicator says something about the performance of a stock compared to the recent performance of the same stock. A stock qualifying for CANSLIM should have at least some institutional owners. Ideally, this number is increasing over the past quarters. Also, we don't want the percentage of shares already owned by institutions to be too high. Mature stocks are often largely owned by institutional investors. The sweet spot is when institutions are increasingly discovering the stock, which will create buying pressure. When institutions already all own the stock, you would expect less buying pressure. Our example screen requires the institutional ownership to be below 85%, but you can make this condition more strict. Market direction is another technical component of the system that says that you should always be aware of the general market direction. And when you found a stock that meets all of your criteria, but the direction of the general market is down, so a bear market environment, there is a very big chance your great stock will go down with the rest of the market. O'Neill advises to only search for and buy these stocks in bull markets, which is also when you will get the best returns. We suggest having a look at the weekly S&P 500 chart with the ChartMill trend indicator. This indicator indicates whether a trend is positive, negative or neutral. It is available in our charts as an overlay or as a standalone indicator, and it is intended to use on the long-term weekly charts, but you can use it on a shorter time frame as well. Finally, a summary of all the filters we discussed and applied in the video. A quarter-to-quarter earnings per share growth above 20%, quarter-to-quarter revenue growth above 25%, 3-year EPS compound annual growth rate of 25%, a return on equity of at least 10%, a debt ratio of less than 2, and a relative strength of more than 75. Institutional ownership below 85%, and there is also a minimum average volume of 100,000 shares per day to ensure liquidity. We have put all these filters together in a predefined screen that you can find on our Trading Ideas page. You can either apply the filters immediately from here, or you can visit the actual screen page first to see more information and related documentation. The book is a must-read for any investor interested in growth investing. The strength of CANSLIM is that it consists of mostly fundamental parameters, but also takes into consideration some important pricing factors and general market conditions. It is our belief that the trading idea is an ideal starting point to further fine-tune the parameters according to your own strategy. In the article accompanying this video, whose link is in the description below, you will find a number of alternative settings, but of course there are many other possibilities. No ChartMill account yet? Then go to the website and register for a free account. And to be clear, no payment information is requested and your free account will never automatically convert into a paying subscription. Basic use of the screener with all available features is completely free. Please don't forget to like us and follow our channel to stay up to date with new videos. Thanks for watching. See you next time.